Geetha, this guy just got to Ford. He was supposed to boost their software sales, and now he's going to go to Peloton. He was at Apple. Tell us a little bit about Peter Stern and what he can do for the, what is it called? Stationary cycling company.
There you go.
Yeah, thanks, Matt. So it looks like Peter Stern does, of course, have a pretty good track record. As you said, he comes from Apple. He was the co-founder of Apple Fitness. So I think that kind of gives him a lot of credibility. And before Ford and Apple, he was at Time Warner Cable. So I think, he kind of can cover a lot of different bases here, whether it's the intersection of hardware, software, running a subscription services business, which is exactly what Peloton is. So I think he definitely brings a strong track record. And it looks like he's a great fitness enthusiast himself. I mean, he's the son of a fitness instructor. So, it definitely it seems like a pretty good match. We'll have to wait and see what happens.
Yeah, you think about what he was hired to do at Ford just last year, running their newly created technology-focused division, focusing on harnessing the growth in car software services. Like you said, of course, Peloton trying to strategically shift its focus from being that hardware-heavy sort of company to being really a high-margin subscription revenue business. This was something that Barry McCarthy was trying to do as well, really put the mobile app at the center of the business.
Yes, he was trying to do that. He had a pretty good track record, too, coming from both Spotify and Netflix. But Peloton has really, suffered from really a host of different challenges when Barry McCarthy took over. I mean, of course, they had a problem of, very high levels of inventory. The cost structure was not aligned, with the demand. Demand was falling after the pull forward from the pandemic. So there were really many, many different things that had to be done. And so what has happened after Barry McCarthy left is they have this co-CEO structure, and the two interim CEOs, while it has been a stopgap arrangement, have really delivered in terms of a focus on cost cutting and a focus on profitability, and they've really kind of shifted that narrative. Now with the new CEO, what we really need is kind of this articulation of what his strategic vision is for the brand, for the product, whether they want to go into new modalities. And one always has to wonder, kind of just given his background in Apple, Katie, whether there will be an ultimate M&A play here.
Speaking of M&A, you think about just how far this company has come from its highs. This was trading at $167 per share in 2021, and now we're trading at less than $8, even with the spike you're seeing today. And so, how much more upside is there for Peloton? Why wouldn't a buyer just swoop in right now while it's still so cheap, Geetha? Because there's upside starting to show in the performance.
Yeah, I mean, so now David Einhorn seems to think that it is severely undervalued, and he does make a few good points. I mean, this company does have a very, very loyal customer base. There's no doubt about that. Churn is very, very low, just kind of given the business, and they have some of the best content. They are absolutely the best connected fitness experience. But there have been, the problems in terms of a high debt load, which they're again working to correct. The problem with, a very a bulky cost structure, which again they're right-sizing. Yeah, I mean, M&A has always kind of been this big question for Peloton, and we'll have to see what happens right now. I mean, Apple has always been kind of this big rumored name, but as we know, Apple's always been shy about
Peloton
going
could buy
after.
Apple? That would be insane.
Yeah.
No, Geetha, I mean, the idea is it's only a $3 billion company, right, Peloton?
Right,
so
right.
Are they looking for a suitor? Is that the feeling in the market?
There were some rumors, Matt, that they were kind of approaching private equity, and that's kind of where the whole cost cut and the focus on free cash flow and EBITDA kind of played into that. But again, those rumors kind of died out. But with David Einhorn kind of pounding the table, you have this new CEO. A lot of things could happen.